Silver has always occupied a unique position in the global financial system. Unlike many other commodities, silver serves two important roles at the same time. It is both a precious metal that investors purchase as a store of value and an industrial metal used in thousands of products that power the modern economy. Because of this dual role, silver often behaves differently from gold, stocks, or other commodities. During periods of economic uncertainty, investors may buy silver as a safe haven asset, while during times of economic expansion, growing industrial demand can also support prices. In recent years, silver has attracted increasing attention as technological innovation, renewable energy, artificial intelligence, electric vehicles, and global infrastructure development continue expanding. Many investors believe silver could experience significant price appreciation before the end of this decade. At the same time, others remain cautious, because silver has historically experienced periods of substantial price volatility. This has led to an important question: what could become the hidden catalyst that drives silver prices higher in the coming years? While no one can predict future prices with certainty, several long-term trends may significantly influence silver markets. In this video, we will explore those factors, examine both opportunities and risks, and discuss why silver continues attracting attention from investors around the world. Today, we will talk about silver price prediction, the hidden catalyst nobody is talking about. So, before we start, make sure to hit the like button and subscribe to my channel. Why silver is different from gold? Although silver and gold are often discussed together, they have very different market dynamics. Gold is primarily viewed as a monetary asset and store of value, while silver combines investment demand with substantial industrial use. This means silver prices are influenced not only by investor sentiment, but also by manufacturing activity, technological innovation, energy production, and global economic growth. Because of this combination, silver sometimes experiences stronger price movements than gold during both rising and falling markets. Industrial demand continues expanding. One of the biggest long-term drivers of silver demand is industrial consumption. Silver possesses exceptional electrical conductivity, thermal conductivity, and corrosion resistance, making it essential for many advanced technologies. Manufacturers use silver in electronics, medical devices, telecommunications equipment, automotive components, semiconductors, batteries, and numerous industrial applications. As global technology adoption accelerates, industrial demand for silver may continue increasing for many years. The renewable energy revolution, perhaps the most important long-term catalyst for silver, is the rapid expansion of renewable energy. Solar panels require silver because of its superior electrical conductivity. As governments and private companies invest billions of dollars into clean energy infrastructure, global solar installations continue reaching new records. Every additional solar project increases demand for silver, making renewable energy one of the most closely watched sectors influencing future silver consumption. Electric vehicles require silver. The transition toward electric transportation represents another significant source of silver demand. Electric vehicles contain considerably more electronic components than traditional gasoline-powered automobiles. Silver is used in electrical contacts, battery systems, charging infrastructure, sensors, switches, and advanced electronic control systems. As electric vehicle adoption expands worldwide, manufacturers may require increasing amounts of silver to support production. Artificial intelligence could become a hidden catalyst. One factor receiving growing attention is artificial intelligence. While AI itself does not directly consume silver, the infrastructure supporting AI requires massive investments in data centers, advanced semiconductors, networking equipment, and electrical systems. These technologies rely on components that often incorporate silver because of its excellent conductivity. As artificial intelligence continues transforming industries, increased demand for electronic infrastructure could indirectly strengthen silver consumption over the coming years. Supply growth faces challenges unlike demand. Silver supply cannot expand rapidly. Developing new mining projects requires years of exploration, financing, environmental approvals, and construction. Furthermore, much of the world's silver is produced as a byproduct of mining other metals, such as copper, lead, and zinc. This means silver production often depends on the economics of entirely different mining operations, rather than silver prices alone. If demand rises faster than production, supply constraints could place upward pressure on prices. Investment demand can change quickly. Silver attracts both industrial buyers and investors. During periods of economic uncertainty, inflation concerns, currency weakness, or geopolitical instability, investors frequently increase allocations to precious metals. Because the silver market is considerably smaller than the gold market, relatively modest increases in investment demand can sometimes produce significant price movements. This sensitivity contributes to silver's reputation for higher volatility. Inflation and monetary policy inflation continues influencing precious metal markets around the world. When purchasing power declines, some investors seek assets that may help preserve long-term wealth. Silver, like gold, has historically attracted interest during inflationary periods. At the same time, central bank interest rate decisions also influence silver prices. Lower interest rates may improve the attractiveness of precious metals, while higher rates sometimes create temporary pressure, as investors shift toward income-producing assets. The gold-to-silver ratio. Many precious metal investors closely monitor the gold-to-silver ratio, which compares the price of gold with the price of silver. Historically, this ratio has fluctuated considerably over time. Some analysts believe that unusually high ratios may indicate silver is relatively undervalued compared to gold. Although this relationship does not guarantee future performance, the ratio remains one of several indicators investors use when evaluating precious metal markets. Central bank activity influences precious metals. Although central banks primarily purchase gold rather than silver, their monetary policies strongly affect both metals. Decisions involving interest rates, money supply, inflation management, and currency stability all influence investor demand for precious metals. If economic uncertainty increases, or confidence in traditional financial assets weakens, silver could benefit alongside gold as investors seek diversification. Technology continues expanding silver usage beyond renewable energy and electric vehicles. Silver remains essential in emerging technologies, including advanced medical equipment, high-speed communications, aerospace systems, robotics, wearable devices, and next-generation electronics. As technology becomes increasingly sophisticated, silver's unique physical properties continue making it difficult to replace in many specialized applications. This growing technological dependence may support long-term demand, even as manufacturing methods evolve. Risks every silver investor should understand. Despite its promising outlook, silver remains a volatile investment. Prices can fluctuate significantly due to changes in industrial demand, investor sentiment, global economic growth, interest rates, currency movements, and geopolitical developments. Economic slowdowns may temporarily reduce industrial consumption, while stronger economic conditions may shift investor attention toward higher risk assets. Investors should recognize that silver's price movements can be considerably more dramatic than those of gold. If you liked this video and would like to see more like it, please give it a thumbs up. Leave a comment and click the button to subscribe.